Hello, everyone. Welcome to the session. I do this session every year, and it's always packed, so it's great to see you all here. This is about how to take an idea from a weekend hack to a funded startup. And I have a great panel here of people who have done it themselves, who have invested in companies like that, and who are today professional venture capitalists. So let's start by introducing the panel. Rich Miner, tell us about yourself.
Sure. So background in computer science, have done a couple of startups, been around for a while. My first one was in the early 90s. Actually, even before then, I helped a guy starting a company called Avid Technology, which is a video editing system that most of the videos you see were created on. Did that while I was at university. Then started another company called Wildfire Communications, which I sold to Orange, a European mobile phone company. And then started a venture fund for them, invested in some companies. One of them was run by this guy called Andy Rubin, a company called Danger. Kept in touch with Andy, and then co-founded a company with him called Android, which I sold to Google, and then have helped Google get Google Ventures going. Now I invest in startups.
Kevin Rose probably needs no introduction, but tell us a little bit.
Sure. Been doing the startup thing since 2004. Started Dig, a social news site. Also Revision 3, Pounce, Milk, Oink. We follow a ton of little fun, crazy projects. And started angel investing probably about 3 years ago. And have since joined Google and moved on as a venture partner at Google Ventures.
I'm Naval. I'm the founder and CEO of AngelList, and prior to that, I was an entrepreneur and co-author of Venture Hacks, and started companies and everything, doing from optical amplifiers and .coms, and made investors money, lost investors money, made money, lost money, lose money. Now helping other people make and lose money.
Excellent. Okay, so you're all entrepreneurs. Started multiple companies, you're angel investors and have invested in many companies. 2 of you are now professional VCs. What do you look for when you make an investment? What are those things? Is it the team? Is it the product? Is it the idea? Tell us what you look for when you make a decision.
So personally, I like ideas that are just big, groundbreaking, new ideas. You know, every time there's a pop in the industry, something like a Pinterest or a Groupon or you name it, you see 50, 100 other ideas along that genre of idea. Yeah. And you know, 99% of the time those will never succeed. Those are just people that are copying other ideas. And the one time that I actually did see that work though was when Yammer took Twitter and made it into a business platform. But oftentimes those just fizzle out. So something that's just, you know, potentially something that it just hasn't been done before. I'm tired of seeing the same thing over and over and over again.
But I would remind you, Google was probably the 12th search engine, maybe 15th search engine that came along.
Sure, but the PageRank was a completely new way of looking at how to rank documents though, right?
Yeah.
I also think Google never, so I had the misfortune of knowing Larry and Sergey from the early days and not joining up. And at least my sense at the time was it was in no way derivative. They did not say we are the Alta Vista of X. They never described themselves as such. So I just thought they thought of it as something fundamentally different. I would echo what Kevin said. You definitely want big ideas, but frankly, ideas are a dime a dozen. And in a lot of the recently celebrated success cases and exits, like Instagram and Yammer and OMG Pop, were all pivots. The thing that I'm learning myself doing AngelList, which is an enormous struggle. I mean, all startups are, but this is like the biggest struggle ever for me. The thing I'm realizing is determination matters more than almost anything else. If you stick with something to the bitter end, and if you're smart and you're working in a big space and you just do not give up, I think you will have a better outcome than people who are looking for that pop. So in a sense, I reject the premise of the title of this panel. Which is, I don't think you should take your weekend hack into a startup, because a real startup is a 5 or 10-year commitment of your life. It's like getting married, but worse, without a lot of the intermediate upside. There's a lot less sex involved.
Depends on the marriage.
That's right, it does depend on the marriage. But, and in many cases, it's harder to get divorced from a startup because you're divorcing your entire network. So I would not go from a weekend hack to a startup unless that weekend hack is something you were deeply, deeply, deeply passionate about. And you're now in Silicon Valley, you're competing against the best people in the world who have been attracted from all around the world, doing what they do best. 99th percentile is not good enough. If you're 99th percentile, you will go home in tears and ruin. So you need to be 99.99 percentile. And the way you get there is by being obsessed with something, so that is all you do. And you shouldn't bother building a startup with anything you're not obsessed about. So it is this perfect storm of you have to have the right knowledge, you have to be teamed up with the right people, you have to be working on something you really care about. Coincidentally, it also has to be big, because a lot of us are passionate about things that are not world-changing in the end. It has to be relatively unique, the timing has to be good, your execution has to be flawless, you have to be teamed up with the right people, and even then you're probably better off being a venture capitalist as far as the economics are concerned. So you really got to be into it.
Yeah, and I want to emphasize one thing, which is the people that was mentioned, because typically for me that's almost even first and foremost above the idea itself. And people is best if it's team, not individual. And even the data shows this, that founding teams are better than individual founders. That doesn't mean as a sole founder you shouldn't be pushing forward your idea, but you should definitely get teamed up with great people. Because for me, it's often a gut feel as to this might be a good idea, but frankly, I don't think this team can execute on it. I'll likely not invest, no matter how much I like the idea. At the same time, if I think that somebody has something, but it doesn't seem quite right, but I'm really impressed with the team, or it's a crowded space where other people have gone into it, but they have a slight twist on it, and I'm really impressed with the team. And I think that was probably the case with Google, with Larry and Sergey. I think people saw, yes, people have, this is search and search-like, but there's some really bright people here with a different way of looking at it. And so, founding teams, I think for a lot of investors, is definitely something that's up there in importance. And in fact, a lot of people say it's the people as the top three things they look at.
So they do. They say team, idea, market. Which of those, do all of them have to be present? Do you have to have a demonstrable product? So what stage do you get involved, and what are the most important factors in your decision?
Yeah, the litmus test I do is, do I like the team? Does this seem like an idea that I can understand? Do I think that team understands who they're going to target market that idea to, what the population of that group is, and how they're going to start targeting some initial segment of it? And then ideally, if they do that, do you believe there's some way that you can make money? And if you look at the dollars times the market times who of that market they think they can address, does that look like an interesting business? And those are sort of the quick back of the envelope I'll do. And you don't need to have all of those things. If you're blown away by a couple of them and they're missing something, but you think they'll figure it out, and oftentimes it's how do they make money, especially in consumer internet. But if you really think they can blow something out big, typically money follows. That's not necessarily a good answer for you to have. You want to have thought it through a little bit, but you don't have to have, here's our third-year revenue. That's not going to be believable anyways.
Kevin, any thoughts?
Yeah, I think that on consumer internet plays, oftentimes they don't really have a business model. I remember when I first saw Instagram and sat down with Kevin, I wanted to invest. He really just wasn't even thinking about revenue at that point. But it was clear that he had a little seed of traction, and I could just tell that how quickly he was spreading over the course of, I think he had been launched for probably about 2 or 3 weeks. He already had great numbers. And there was no one else in that space. And so he was kind of the first of the space. It was super simple, lightweight, elegant, easy to use. He put a lot of emphasis on performance, doing a lot of the background uploading a lot of the uploading of the images in the background. So from a user experience, it was really clean and fast. In that case, I was wanting to go in based solely on the fact that he was just really executing and building something that was first to market. But yeah, I agree in that team is most important. There was an investment I did in a company called Yabongo, which this guy, the CEO, Caleb, smart early 20-somethings entrepreneur that blew me away when we sat down and we had some coffee, and he was just this phenomenal, really big thinker. He ended up selling his company, and I made most of the money back, and now he's working on another project. But if he goes into something else, I'll back him again, because he is just, you sit down with the person and this might not be the idea, but they're going to hit someday, and they're going to hit big because just of who they are.
Excellent. There are microphones on either side here, and I want to encourage your questions. So think up questions, stand at the mic, I'll recognize you, and have you do it. I'm going to continue to ask questions, but if someone stands up, I'll let you in. Naval, AngelList. AngelList has really changed the early stage angel investing scene. Give us some numbers. How many projects are on AngelList? How many have been funded? How many investors?
So anyone can list a project. That's not hard. You can just go create a profile. So we have 70,000 of those. Of them, I'd say probably between 10 and 15,000 are actually legitimate attempts at companies. In other words, it's, people are thoughtful about it. They're actually going to pursue it. Of that, I'd say about 3,000 to 4,000 are probably financeable, and of those, between 1,000 and 2,000 have gotten financed. Not all of that volume gets driven by AngelList. To some extent, we're a listing service. To some extent, we're a matchmaking service. On the matchmaking side, we've probably driven a little over 1,000 of those investments. We do about 200 introductions a week between startups and investors. And we drive right now about 600 introductions a week between talent and startups. So if your company fails and you want to go join a cool startup very early on, we try and make that easier for you as well. I don't think it's changed the investing landscape that much yet. We're still working on a lot of things. It's only a little over 2 years old. I think what's really happened is the landscape itself has changed, and we're just more a reflection of that. And what's changed is the cost of building a startup, at least early on, has collapsed. You can launch and then raise. You can get really far in 250 or 500K. So the set of investors that are available to you is expanded. The number of people playing is expanded. Investors can get more data points. There's a lot more competition, a lot more noise, a lot less signal. There's a lot of stuff going on. So the market is changing very, very rapidly, and it's changing in fundamental structural ways. And I think a lot of that is happening because we have these deployment and code platforms like Amazon and Google and so on that you can spread your product on. We have development platforms. We have labor platforms, Mechanical Turk and so on. And now we have capital platforms like AngelList and Kickstarter. So you combine all that together, and the leverage available to a modern entrepreneur is unbelievable. I was talking to a fellow guy that I sort of worked with 10 years ago. We're coming up the escalator, and he said, "Oh," I'm like, "So what did you used to do at this company?" We had two companies that ended up merging, and he said, "Oh, I used to build, data slicing stuff." So I was like, "Oh, okay, so you had like a team of 10 people doing manually what like you could do with a day with Solar today, right? Like you could just set up your Solar instance and you'd be done." So things have changed, and it's great, but it just means it's also insanely competitive. And AngelList is a reflection of that. As the number of companies has scaled, the number of investors has scaled, the amount of data you need scales, the amount of capital you need goes down, the information you need has to be digestible in a different format. And so, if an AngelList did not exist, it would be necessary to create it.
So AngelList has raised significant money for over 1,000 companies. Most recently, I read about Rally, which I think Kevin is an investor in, and Google Ventures is an investor in. And they raised $8 million total, and $4 million of that through AngelList?
Yeah, between 4 and 4.5.
That's how I initially found out about it. Was
Great. Excellent.
So
I hope they make you money.
raising $4 million on AngelList, that's pretty disruptive. That was never possible before.
Yeah, although there's a VC firm in there, and one of the dirty secrets of AngelList is more than half the flowing capital comes from venture capitalists. There are a lot of VCs playing in the seed market now. The whole power of the Series A firms has traditionally derived from being first money in. And to the extent that a venture firm is not able to play in the first money in space, they gradually lose influence and control with entrepreneurs.
Exactly.
And what has happened is the Series A firms used to be the first money in. These are all the names you know. And then in front of them sprung up the super angels, and then in front of them sprung up the angels, and in front of them sprung up the incubators. So the chain has gotten a lot larger now. So I think a lot of the venture capital firms are now doing seed investing, and they're trying to get back to the first money in principle. And that is causing huge pricing and behavior aberrations in the market. Because to a venture capitalist, $25 million out of their fund is a marketing expense. They might be perfectly happy just spending that to build relationships. Maybe the next Caleb, to your point, but to an angel or a seed fund, that's your life's blood. You got to make money on that pile. So we're seeing some really aberrant behavior in the market right now.
So did you hear that? Kevin found out about Rally on AngelList. So if you don't have any other avenue to get to investors, get yourself on AngelList, and people like us, I think every one of us is on AngelList, and there are thousands of investors there. So that's That's a
Yeah,
good
not to
point.
set expectations crazy. So the reality is we get about 100 company profiles created a day. 80 or 90 of them we can never look at. We do algorithmic screens on them, incomplete profiles, social graph filters, structured traction, where you went to school, all that stuff. Maybe the top 10 or 15 we actually manually review, and maybe one every 2 days we get to send out. There's another one or two that get funded either serendipitously or because their own network on AngelList shares them.
Right.
So it is still, we don't take your unfinanceable company and make it financeable, but hopefully we can accelerate your financing, get you more options. And essentially you can think of us as running a global spam filter in the crowd for busy venture capitalists. There's no reason why every VC firm needs to have 10 associates screening deal flow. You can just put them all in the cloud and screen out the obvious junk, and then beyond that level where you're trying to find fit and judgment, that's where the human element comes in. And to Rich's point, I think I completely agree that team is the most important thing. And so the place where AngelList and any online network falls down is on screening the team. So we're working very hard on introducing new features that help you figure out who the good people are and how to screen them and analyze their backgrounds and at least do another level of filtering there. Because another thing any good venture capitalist will tell you is they usually know within the first 5 minutes if the team is backable or not. And then they got to sit through the next 40 or 50 minutes scheduled on the calendar looking at their watch, trying not to look at their BlackBerry. Not because they're rude, because they're busy and they've already sort of decided. So that should be a more efficient filtering process.
I'd like to drill down more on that in a minute, but first let's take some audience questions from the audience.
Thank you. I want to hear about that as well. And you were also mentioning some things that are not understandable to me. You're talking about different levels of like pre-investors and all that. And so I guess my question is about how do you get an audience that starts any of those kinds of things going? And I guess you mentioned AngelList, which is helpful. If you could tell more about that. And the other part I have a question of is a lot of these, what you're explaining are ideas for huge companies like the next Pinterest or whatever it is, but what about those kind of medium size? I mean, I think I have a great idea, something that requires, a creative team and some full-time as well, but we're not talking about hundreds, we're talking about, a dozen or so. So anyway, is there any avenue for someone to get a startup like that? And if you have any advice on that.
Yeah, I think it's just a bad road to go down. If you go to someone, you say, I'm trying to build something small or medium-sized, you're unfundable. And you're unfundable because in game theory terms, this is what's called a Keynesian beauty contest, where each round of judges is trying to pick what the next round of judges is going to pick. So the problem an angel has is if you're not going for something big is they don't want to invest in you because they know that no VC will invest in you because VCs have big funds and only want to go for big things. And the VCs don't want to invest in you because the private equity people won't eventually want to invest in you. And because that angel doesn't want to invest in you, incubators aren't going to want to invest in you. So that knowledge ripples all the way back through the chain. So unless you can build something or you have a shot, and not everything goes huge, obviously, but if your aspiration is not to be huge, you end up unfinanceable. That said, a lot of these things that turn out to be huge are completely non-obvious. They're going to be huge at the beginning. So I don't think you have to necessarily have an articulation for how it's going to be gigantic. Like I don't think either Instagram or Pinterest could have made that argument.
That's kind of what I'm getting at. Is
Sure.
there's this first step that is we show something amazing,
Yeah.
and it has that next.
But don't shoot yourself in the foot by saying we're going to build something medium-sized or small. Just that's a huge
By the way,
negative signal.
large can be relative to a market too, right? The market doesn't need to be everybody in this room, but if you can say there are these people, they need X, we think we can get 90% of those guys. I mean, again, there's ways of saying we're going to crush this and then grow from there, but you want to use that terminology, not aiming high.
And I think that there's, I've seen several times that different angel investors put money into things that they're personally passionate about. And oftentimes it doesn't have to be a big business. It's just something like, I know a buddy of mine has a ramen shop and he got a bunch of tech angel investors to put money in the ramen shop. They're not trying to make $1 billion off the ramen shop. They just like the idea, right? So if you can find those like-minded investors, that's another potential avenue for you. The other thing too is, sometimes you just don't need investment. I mean, you can do this yourself. I created a little service called WeFollow that was a directory for Twitter users early on. And it grew to over 1 million users, adding all of their tags and credentials to it. And I had some people approach me saying, hey, do you want to take some money for this? And I'm like, no, I don't want to. This is just a little hobby. It's running on 2 servers. And it ended up, I slapped on some AdSense ads and it makes a couple $1,000s a month and pays for awesome dinners and Uber cab rides, and that's what it does, and it's awesome, and there's no employees. So that's always a potential way to go as well.
Yeah, thank you.
Over here?
Yeah, I've heard you guys talk about team and the importance of people and different characteristics of people. Where does education fall into that, be it formal, informal? When you view and you talk to somebody and you talk about their background a little bit, where do you put an education, the importance of their education, and again, being formal or informal?
Yeah, I mean, for me, that's a hard one. I mean, I've funded college dropouts, right? You know, that just, again, you know, seem to be wiser than their years and their education status. You know, I work near MIT, but I'm a graduate of the UMass Lowell school system. You know, so to me, like, it's really the person and it's how smart they are. And to me, that's something that is potentially influenced by a degree, but is really can be street smarts as well. So, you know, again, I think what you don't want to do is not show that you're not educated in a space you're trying to get into. If you're trying to build something technically complex from a computer science standpoint, I want to see somebody that has some, you know, to me it's a red flag if there isn't somebody that has strong computer science fundamental background. And so, you know, again, I think it's somewhat adaptable to the particular opportunity. But if you're passionate about something, you've built a group that you think is absolutely capable of crushing it in an area and that they've got skills that you think you can convince people, pedigree in my mind isn't as important as being able to convince people of those previous attributes I mentioned.
Bill Gates dropped out. He did okay. Sean Fanning, he attended one semester of college and he dropped out, and he's done okay too. So it's more about the passion and the drive and getting things done than it is a piece of paper from some university.
Education is one of those weird markets where sort of the least educated people are often least intelligent, but that's just correlation, not causation. And then you've got a set of people who are highly intelligent and highly educated. And at the top, there's the most intelligent. They're usually the least educated again. So they get confused with that other bundle. So you can't use it as a filter function, but you can use it as a signal. So what you really want to see is you want to see evidence of intelligence and drive bundled together. And one way could be 3.9 at MIT and EE. Another way could be dropped out of school, did some amazing open source project, got 1 million followers, right? So it's just a signal. It's data.
Over here.
Thank you. A lot of us in the room are starting mobile app companies, and I was wondering, when do you guys like to invest in seed rounds as far as the product life cycle? Do you like when it's just, you know, screenshots, clickable demo, out in the market, first beta? When should we really go and try and raise that first seed round?
Good question.
I mean, I'll give you my, I mean, to me, it's a very hard question to answer because it's almost different every single time. I mean, certainly if it's a repeat entrepreneur, which you probably wouldn't be in this case, they might have money chasing them before, you know, before they have some sketches down. It really comes back to the people and what you get from them in terms of what they're building. And that can maybe just be conveyed with some sketches and a passionate group and a picture of what they want to build and where they want to take it, and they're able to articulate that clearly. Some people, they might speak all the words, but you still have you can't get that image in your mind, and you really do need to see a functional prototype of what they're talking about. Sometimes with a functional prototype, you're still not convinced that that's going to capture the consumer's, you know, appeal, and you actually want to see it out in the market and gathering some traction. But it literally, it's all across that spectrum for me, and it's case by case.
Right, because I think we hear a lot about traction and how important traction is, and that don't come back to me when you have traction is something that I think is said a lot, and I just was wondering how much truth there is to that, and is it bad for us to go up and try and raise a round when we don't have any traction because we're not in the market?
Look, I think you should always try and find somebody and say, look, can you just take a look at what I'm doing? This is I'm not pitching you. This is a friendly meeting. Can you give me feedback? And I bet you'll find people willing to give you some feedback.
Yeah, I think come back when you have traction is a fancy way of just saying, I don't believe in what you're building right now.
Yeah.
I think that it's nice to have a working prototype, especially given how fast, you know, if you can prototype something up real quick, it doesn't matter if it's, you know, on the App Store or not, if it's just working on your phone. And it's also a great way to pitch people. I've had people come up to me and you know, at a bar or function or something like that and say like, hey, I need 30 seconds of your time. I just want to show you this app real quick. And it's something I can look at rather than like whispering over. So my idea is this, you know, it's like, it's so much better to play with it. So if you can build something, even if there's no back end associated with that to where you can just walk through it with your fingers, I mean, do that.
Right. Thank you.
Great. Over here.
Hi, guys. So coming from an East Coast Massachusetts suburbs and not really knowing any VCs or INs in a Silicon Valley-esque area, what would you suggest for a path in getting your idea recognized by VCs or mentors who can help out with getting your idea right on track? I know I'm probably not alone in a unique situation or anything, but just seeing myself with my friends may want to make something really cool, you know, what would you suggest?
You know, it sounds stupid, but build something really cool and the world would be the path to your door. I really think that's, especially in Silicon Valley, because if you're in the venture or the angel business, you're hunting for great people and great ideas. If you're going around, to Kevin's point, if you're yelling your idea in a crowded bar, that's not going to get you very far. If you're walking around with something really cool that people are crowding around, that's going to get you pretty far. If someone downloads something of yours off the App Store and is like, wow, this is a really great app, they'll call you. So the best way to get noticed is just to build something great. Like I have never gone out and tried to raise $1 for AngelList. I get offers all day long because I'm just keep working on it and the offers keep coming in. So I know that sounds very much like build it and they will come, but in the case of Silicon Valley investors, it actually is very much true. That said, you can't walk 20 feet here without tripping over an investor. And you have lots and lots of connections in common with them or you'll form them very quickly. You ask Path, one of the things we do on AngelList is you come in, you connect your social networks, and we show you your 6 degrees of separation path to any investor on the site. So you can figure out who you have in common, LinkedIn, Twitter, Facebook, whatever. So you can always get there, but I would say focus on the product first and investment second. The investment will come when the product is ready.
Yeah. I would also throw on there that when you're building your product, do it in a social environment. Like head out to some of these coffee shops in San Francisco that everyone gathers around. I mean, there's so many startups around here just like in coffee shops, meeting each other, hanging out. There's social events that happen all the time. Get on some of these calendars, look at some of these different startup groups and organizations that are out there, and just network. You really have to network and meet new people, and you'll be connected up with angels and the people that you want to know within, you know, a month or two max.
The good news is if you're a builder, there's more networkers in the system than there are builders. It's like in biology where there are more parasites than there are self-standing host creatures. There's about 6 times as many parasites. I'm not calling them parasites.
Are we the parasites then?
Yeah, but there's a lot more networkers in the system than there are actually builders. There are a lot fewer builders. Like in Hollywood, there are a lot fewer actors and directors than there are all surrounding support cast. So that support cast will find you. If you're sitting in a coffee shop and you're coding something up cool and showing really neat demos, believe me, like 20 people come out of the woodwork and your table will be full and they'll be trying to figure out how to help you because all value in Silicon Valley originates from the builders, and those are the scarcest resource. So if you're a builder, the ecosystem will find you. I think your problem is going to be the opposite, which is going to be how to figure out which networker or connector to go through who doesn't like take you to the wrong place or isn't very smart or tries to take a cut or screws up your company somehow.
Yeah. So full disclosure, I'm actually a Boston-based venture capitalist, not Silicon Valley. So, I mean, in your particular case, just come into Boston, Cambridge. I mean, all of the VCs have moved back into the Cambridge area. It's a very dense, vibrant environment around Kendall Square. Go online, check VentureFizz and some other resources. You'll see literally almost every day of the week there are startup meetups in the evening or coffees in the morning. Bijan and Nabil, Bijan from Spark and Nabil from Spark do a venture coffee once a week. They're not always there, but they're typically are other VCs and other startups. So, you know, Boston's a pretty vibrant startup environment. It's typically number 2 to Silicon Valley historically. So, you know, head into town and you'll meet up with people.
I have 2 pieces of advice for you. Number 1, the best path to starting a startup is to work at a startup. So if the first thing I would do is join a startup, learn how a startup gets built, learn how they attract investors, learn how they attract customers, learn how they attract employees, get into that ecosystem. That's the best training for doing a startup is to work at a startup. The second way is network with friends. Find friends who are working at a startup or who have started a company, and they will lead you to investors and other people. So those are 2 ways to do it. But Naval's right. If you're a builder, they will just come and find you. Over here.
Thank you so much.
Thank you. I have a startup that is in the early traction stage and an investor that has instructed me to go build a team. And I found it very difficult to find people that are qualified and understand that long-term commitment that you were talking about, Naval. Are there channels that you can recommend? I kind of feel like sitting on the sidewalk with a cardboard sign at this stage.
That's a tough one. There's two things in a startup that matter, selling and building. And this is the hardest sales thing right now, which is you got to convince people to join your vision and your dream. To Don's point, the reason why I think it's so important to work in a startup is to build up a great alumni network. The people who have done the best over the years are the ones who just had incredible alumni networks coming out. Look at what the early Googlers went on to do or what the PayPal Mafia went on to do. Just unbelievable. So I would say you have to reach back into your startup alumni networks. Other than that, I can tell you when I started AngelList, it was a MailChimp and Wufoo. Try recruiting an engineer into that. It's like the least exciting thing on the planet. You've got a user base of 25 people and you're running a mailing list. But the reality is just as you build it up, it will get easier and easier to recruit. Now we turn away candidates. So it's just, you got to build traction. So you can look at your alumni networks, you can build traction. By the way, the code from this investor saying you got to build a team might just be, I don't really believe in you. So just, investors say no in many different ways because it's very hard to look at someone and say
Actually,
your
he's
baby's
already
ugly.
written a check, so...
So he's written a check.
Yes.
Okay, that's good. Well,
Yes.
so they do believe there.
Yes.
I guess this is part of the test of being an entrepreneur.
Yes.
Can you recruit?
Thank you.
If you drill down, hold on a second. If you drill down on why team is so important, if you look at why that's true, it's because if you can attract another founder or two founders who believe in your idea so much that they're willing to stop what they're doing and join you, then that's validation that your idea might have some legs. It's also when investors look at that team, they say, wow, here's 2 or 3 guys that have had experience doing other things. They've come together to try to make this idea work. It's additional validation. So that's why single founders almost never get funded.
Thank you.
I don't know what you're building, but you mentioned you're getting traction. So that's a network that you've started to build. You might want to find some way to leverage the community of people with whom your product has traction with to let that community know that you're hiring.
It's a good point.
I would say also just go after, you have to go after, find individuals that you really respect and hunt them down and convince them to join your startup. I did something very similar to this when in 2004 I was a big fan of the Mozilla website and the Firefox work and the Firefox logo. And I found out one of the guys behind this, his name was Daniel Burka, and he lived in Canada and he was a designer. And he was doing a bunch of design work. Mozilla was one of his clients. And I finally got a hold of him. And I was like, give me a week of your time. Like, I'll pay you, come on as a freelancer, give me a week of your time. I just want you to think through some of these issues, work on some of these usability problems I'm having. And so we got together. He flew into San Francisco. We worked on some of this stuff. We became friends. We had a lot of fun. I showed him around the city. He thought the city was awesome. I convinced him to move out here from Canada. We got him a visa, and he joined the company. It was a long road. It was like a 3 or 4 month process to make this happen, but it finally happened. So just find those rock stars that you want to go after if you know of any, and hunt them down and convince them to join your startup.
Yeah, I'm not as good as Kevin. It takes me 6 to 12 months to recruit somebody good. From the moment I identify them and start courting them, it's a 6 to 12 month process, and it's like you're trying to get someone to break up with their significant other and leave their relationship. So you kind of have to wait for the low point, and so you just kind of have to hang out there, be friendly, make them offers, take them out for drinks, and then that month when they happen to be having a bad time, then you swoop in and you take it over. It's a long process.
And don't worry about being shameless. Send candy, send spouse flowers,
I've had to pitch spouses. Go in there with a PowerPoint and pitch the spouse. So.
Exactly. Thank you.
Okay, we have lots of questions out here, and I want to make sure that we get to all of them. So a couple of rules: no commercials, no pitches, just questions, and try to make them short so that we can get through as many as possible. Over here.
Yeah, I'm from India, and I'm doing a startup there, getting some traction. But when I was listening to the panel, I heard you say that there is this chain. The angels have to sell to VCs, the VCs have to sell to the PEs, and so on and so forth. Just wanted to ask this question. is it better then to raise angel in India, or will it help if I actually raise angel in the US? And how do I go about it? Is AngelList okay, with an Indian trying to raise angel money in India, in the US?
If you have traction and you're based here, at least for some period of time, like you're here for a month or two, you can raise money from US investors. There are a lot of ex-Indian origin angels now in the US area, so we can help there. But you need to have traction because people don't want to invest around the world unless there's something there. You can also find local investors, a company called Freshdesk that raise money through AngelList that's in India from Indian investors. So it happens, it's just rarer. And hopefully we'll get more Indian investors on. But I would say India is probably geography number 6 or 7 for us in terms of volume. Obviously Silicon Valley is huge. The fact that you're out here already means you're on the right track.
You should join TIE. Have you heard of TIE?
Yeah, I'm a member of TIE, yes.
Great, it's a good start. Over here.
It's again question about team. I several times didn't receive money from angels, venture capitalists, because lack of the team. I'm an inventor with several inventions. Many of them I think marketable. Right now I'm concentrated on the one-off technology and we are successful, everything okay. But line of technologies waiting for entrepreneurs. I have a lot of same crazy inventors. They not able raise money because lack of the team. My question is, do you have any institution like venture entrepreneurs, like venture capitalists, and something that maybe even could be another idea for your venture?
I think in a lot of VC's mind, there's a big difference between an inventor and an entrepreneur, and it sounds like you've stumbled on that. Because I think just the idea itself, without the passion and the understanding as to how you're going to get that to blossom within some community, is a big gap. I mean, one thing that you might want to do is this is where being around some of the business schools might be helpful, because there you often have people that understand markets, commercialization, they have a passion for doing a startup, but they're lacking, they need the technical idea, concept, invention, or something that they can bring to market. So that might be one way to start complementing some of the skills for the things that you've put together, and seeing if you can get somebody who has that passion, fire in the belly, and some of the education and understanding as to how you make a company out of that.
I'm asking if any maybe ready institution, like, I don't know, that offering service as entrepreneurs, or that could be a puzzle, piece of the puzzle that necessary for the inventors.
Problem is most entrepreneurs are passionate about their own idea.
Yeah. Right. And that's back to why team is so important. Entrepreneurs are so passionate about their own ideas. The hardest part is to get somebody to drop their idea, to join you on your idea, and then that's validation that you have something really big. So without that, it's going to be very difficult.
Okay, thank you.
Over here.
I was wondering, what type of analysis do you do when a market is very large, but the barrier of entry is very high? So something where there's a lot of regulatory state and federal hurdles that you have to go through, but the market is actually much bigger than most tech markets, but the tech in that market is actually very low.
Like healthcare, or
what?
Like healthcare or energy or those areas.
Yeah. Not actually those areas, but
those kinds of markets tend to have specialized investors who know how to handicap the risks of the regulatory strategies. And most investors who are not familiar with those markets tend not to go into that. That's why you have dedicated clean tech VCs or biotech VCs. If no VC exists in that market, like that market is literally that new, then you have to go find other entrepreneurs or executives who managed to crack that market before and might be willing to be angels. But you just got to find people with domain expertise, and you can use Crunchbase or AngelList or Google and track down people.
You're getting someone to believe in you who has scaled one of those walls before, who's brought a product in front of the FDA before, whatever, to say, I'm now working with these guys, I believe in what they're doing, and I can help them get over that hurdle. That's probably what you want to do.
Yeah, it's a market I've been in for a long time, and it's definitely different and outside of anything California based or anything that's very trendy. So just curious, if you take those types of risks and how you analyze those types of risks.
There are investors who do, but I don't think that's us.
Okay.
So what's the typical range of investment at a seed round, and what do investors want in return? Like, how much would they want?
Highly dependent on the company, but the averages these days for a seed round, what's called a seed round, is around 250K to $1 million, and normally you sell about 20% of the company.
Okay, thanks.
Yep, good answer. Over here.
All right, yeah, I have a quick two-part. So if you feel like you do have a great team, you've got a disruptive idea, but you're going into a market where there are big competitors that could copy quickly and adopt that idea, what would be your recommendation for that company in terms of posting for crowdsourcing, posting to AngelList, trying to find it that way? And then if you guys have time at the end, what's the craziest pitch you've gotten from an entrepreneur? Or the craziest way they've gotten a hold of you to do that pitch?
Yeah, on your first point, I just find people don't copy quickly.
Okay.
I mean, so I just go for it. If you think it's a big idea and you have a great team, first of all, send Kevin or I an email, and then, but just go for it.
You're going to have the opposite problem. The problem you're going to have is going to be shouting your product and idea from the rooftops, and nobody will want it. That's the most likely case.
Okay.
I've even gone through the whole secrecy thing as an entrepreneur myself, and I always regret it later, because all it does is it slows down the process of getting partners, getting customers, getting investors, getting feedback. And the reality is, if your idea truly can be copied easily, and if big companies are somehow inclined to copy it easily, and if somehow they can get through their bureaucracy and priorities and do it, then you're dead anyway. So figure that out sooner rather than later.
Okay.
Figure that out in 1 year instead of 10 years.
That's a huge point that some first-time entrepreneurs miss. They try to keep their idea secret, or they ask people to sign NDAs.
Yeah.
It's not going to happen. You want to shout your idea from the rooftops to see who's going to be attracted to it. Okay. Don't worry about somebody copying your idea. Two reasons. One is, as I said earlier, entrepreneurs are passionate about their idea. They're totally focused on their idea. They don't care what your idea is, they care what their idea is. Yeah. So getting them to pay attention to your idea is the hardest thing in the world. Don't worry about big companies copying your idea. Google has a list of thousands of ideas that we have yet to get to.
Okay.
They aren't going to drop.
And even some of the ones we have.
Yeah, so big companies don't copy other ideas very often because they have a million ideas themselves that they want to get to that they don't have time for. So
yeah, I would say like out of 10 or 15,000 pitches that we've reviewed at AngelList in the last 2 years, which is probably the most of any human on the planet, we've probably seen 2 or 3 unique ideas, and not in a good way.
I think that features get copied, ideas really don't get copied. I mean, have you seen a lot of different innovation on little tiny features, pull to refresh, whatever it may be, and all of a sudden that's a big company will see that, say, oh, that's interesting, that fits into what we're doing, and then if it's easy to implement, they'll do that. But if it's really an idea, a unique big idea, like, yeah, I agree, big companies don't move that fast.
Okay. All right, thank you.
So you've made some analogies to marriage and creating a startup. As someone who's married, someone who is working at a successful company who makes a pretty good living, can you give any advice of how you can determine if you really should throw yourself into this pit of a startup? Because I'm somewhat paralyzed with, I am confident I have an idea that I think could be successful, but I am standing kind of at the edge and I'm like, I don't know how to jump into that.
It is like marriage. If you have to think about it, the answer is no.
Exactly right. It is exactly like marriage. If you can't think about anything else, if you can't imagine not moving forward with this person or with this idea, that's when you get married. That's when you start a company. If you're not totally convinced and totally passionate, don't get married and don't start a company.
So you could approach it like dating, though, and just do it on the side at night.
That's good.
The thing is, I'm married, have 2 kids. It's really the how do you sacrifice the potential? You've got this potential in front of you, and you've got this stability, and it's trying to figure out, like, is it worth dropping the stability for this huge risk?
It's hard. I mean, there's definitely a risk trade-off, and it's harder when you're a little bit further along in life and have those ties. But I mean, to Kevin's point, I wouldn't take that lightly. you've got friends, you can get some other people passionate about the idea. As we've said up here before, a lot of things can be built relatively easily these days. So, depending on the nature of whatever sort of NDAs you're under and things within your company that you're currently employed by, if you can move something along or have some, other people that you're working with help move it along, that'll decrease the risk potentially around the concept, because it'll maybe start to get some traction or proof of concept. And if you can get your threshold to where, yeah, now I really see it, now I feel like I can do it, now I do feel like I can jump from what I'm doing to go raise some money for that, it's a good way to get over that hurdle.
So just do it then, is what you're saying.
Yeah. I mean, it sounds like you have skills as a backup, right? So if this doesn't work out, you can always go back to it. And when you're laying there on your deathbed at 90 years old, are you going to be pissed that you took a leap and tried something crazy and fun? Probably not, right? Go do it.
Just do it. All right. Thanks.
So let me just add on that point, because I get this question at least once a week, where someone has a great idea and they have a few friends that are working with them nights and weekends to do things, and they say, if I could only raise money, then I could convince them all to quit their jobs and go do the thing. It happens every week. And I tell them, look, from an investor point of view, if you aren't passionate about it, if you don't believe in it enough to quit your job and go do it, why should I believe in it? Why should I give you my money if you don't even believe in it enough to jump into it and do it? So think about that.
And at least from your own personal payback as an entrepreneur, you have to be process focused, not outcome focused. Otherwise, it's like saying, I'm getting married to have kids, my kids better go to Harvard. If I get married to you and our kids don't go to Harvard, I'll be really disappointed, right? So it's sort of a ludicrous thing to just go for the end goal. You literally have to enjoy the process, because most of the time it'll end in tears. So you better have had fun along the way. And if you're outcome focused, then I wouldn't do it. If that's just, and that's not judgmental. I've been outcome focused most of my life, but it's just, you're going to end up in a bad place.
Thanks. So you guys have done a lot of talking about startups, and from what I've seen you guys investing in, a lot of it seems to be consumer internet startups and things that are going to get mass market. But a lot of the stuff I've worked on is kind of small business or indie dev focused in that kind of market. How does that change things when you're looking at investing?
There are tons of those startups out there, and there are tons of them getting funded. So I get this question every panel. Somebody gets up and says, we're doing enterprise, and you guys only do consumer, and oh, woe is me, life is so hard in enterprise. Not true. Life is harder in consumer because there's more of them, they're less differentiated. The few that are getting funded have breakout traction. And you're just seeing the weight of silence evidence. Their hit rate might be 1 in 100, yours is 1 in 10, but there's so fewer of you that you don't notice that. Look at the most celebrated recent exit, Yammer, right? 20 times revenues, 1.2 billion in cash, a huge bidding war. Company's value has gone from, private market valuation has gone from 250 million a year ago to 500 million 6 months ago to a $1.2 billion exit. If you can't raise money in a small business offering, on the back of that, then I would argue you're not building a good product. So don't let the market hold you back. There are plenty of investors who are looking for enterprise or small business or developer-facing products that know how to get traction and can eventually end up in a large market.
I invest in B2B businesses and enterprise type stuff. I always say enterprise is where the money is, consumer is where the users are. You can be successful at both. But what we're seeing with Yammer and some of the others is this fusion of consumer and enterprise, so social enterprise, if you will. Huge opportunities there. You get the traction from the consumers, you get the money from the enterprise. Huge opportunities for any kinds of companies that are taking enterprise software and leveraging consumer aspects. Over here.
So we keep talking about risk management, right? It's all about risk management. We talk about money to reduce risk of what we're doing. Can you speak about more things that VC firms provide besides capital? That's just like the main thing we focus on nowadays. Like TechCrunch says, so-and-so got X amount of dollars and whatever, but they don't talk about the other aspects to it. I think most people are not aware about what else you get from a VC firm besides cash.
And by the way, I think that's a great point. You should, as much as you're out raising money, you should also be interviewing the people who you take money from, and make sure that you're taking money from people who are going to be good money, at least not a problem for you, and hopefully you're going to be able to help and add some value. Most VCs, minimally, are going to be able to write a check, have some knowledge from their past experience, and also have a good network. In the case of Google Ventures, we also have a bunch of vertical domains of expertise, some great guys that are super good at, like we have a whole design practice that helps our portfolio companies build brilliant, beautiful, simple, easy to use products. We have recruiters that help our portfolio companies recruit in new engineers onto their team. We have architects and platform specialists who help our companies build Google scale products because they've done that at Google. So we look at all of the things that Google has done well and help our portfolio company do all of those things really well. All VCs have varying degrees of some value add that they can bring, but you should definitely dig into what they're going to do to help you out and build your company.
So how do you narrow down on the VC firms? What things do you look for that besides the capital aspects? How do you help narrow that down? Is there kind of like predefined like general guidelines to that?
Well, first of all, you'll be in a good situation if you're able to have that many people interested that you're narrowing it down, but the best thing to do is ask them for some CEOs of other companies that they funded. Okay. Or try and find that yourself as well. Right. And get those reference checks, just like they'll do the same on you.
Yeah, I think that you should also check in with them and figure out how much of their time you're actually going to get as well. Right. I mean, one of the things that when Dig finally had some traction and we were able to go and kind of pick out who we wanted to work with from a VC standpoint, I remember we took some money from some Reid Hoffman and from David Z at Greylock, and David was more than willing to come in almost every other week and sit down with us and help us through some of our issues and have that frank conversation and say, like, I like what you've built, I like your portfolio is awesome, but when are we going to get to meet and how often and how can you help me? I think your point to interviewing them is a great one.
So are you nervous about getting married? Is that why you're nervous now, all this marriage talk?
Yeah, a little bit. That's not till next year, though.
All right, thanks.
Hi, I'm from Mexico, and a couple of friends and me, I have a little startup there in Mexico City. My question is, you talked about the importance of being in the ecosystem, being surrounded by all these startups. And our main market is in Mexico, in Latin America. But I don't know if it would be a nice idea to come here in all the Silicon Valley to, mix with all this ecosystem and bring all these ideas and take it to our own startup in Mexico. I don't know.
I think one of the things that needs to happen is there needs to be people like you in other cities that go out and drive the startup culture for that city. I've seen people try to do this in smaller cities. I have some friends that live in Redding, California, a little tiny city, and they go out and find the person with the largest Twitter account, and they hunt that person down and they get them to tweet out that they're going to do a meetup at a bar. I actually did this in Boulder, Colorado a few years ago when it was first starting to kind of explode over there. And we had, 30, 40 people come out, and everyone got together. They were interested in startups, and we met up, and there wasn't that coffee culture that you have here in San Francisco, so this was a way to get everyone together at a certain point during the week, and we talk about startups, and that's how we kick things off. And if you go out there today, and you do the same tweet, it's going to be hundreds of people. And I think that you need to find these other entrepreneurs, sit down with them, and build a culture. It can be done anywhere. You just need to really put in the time and effort to make it happen.
Yeah, actually, in Mexico City, we have this little group of startup people. Yeah, but, here is bigger. And so maybe, I don't know if my market is there, but I move here a year or half a year. It would be counterproductive because I'm away from my market.
It's good to spend a little bit of time here just because it'll force you to up your game. You'll be playing with the best athletes. It's like if you wanted to learn how to make movies and you were making a movie, you could do it anywhere in the world, but it'd be great if you'd spend a little bit of time in Hollywood to understand how they make movies. Or if you want to do theater, you spend a little bit of time in New York. So it's good to spend a little bit of time and have some connections out here. Yeah, but you don't need to be based here all the time if everything you're building is in Mexico.
Yeah, I don't think any of us would encourage you to maybe transplant yourself from where you're comfortable, where your market is, where your connections are. And there's also nothing wrong with being a big fish in a small pond if you really can shout out and have a loud voice where you are. But I think the point is try and find some way of getting that magic that is the essence of the valley or the entrepreneurial spirit and bring it back to where you are.
We only have 5 minutes left. We're moving into lightning round. So lightning round is you ask a question in less than 30 seconds and we'll give you a 30-second answer.
All right, so I hope this resonates with other people. And I like the reference to athletes. So think of like, I could go for a year right now with my own personal finances. I think I'm at the top of my game. I've built a service-based company. Not convinced that any of my own ideas are the one to do. Wondering any suggestions on, I don't want to chase the money. I don't want to talk to VCs or angels because I don't have that idea. I don't want to, what I do want is I want to work with other individuals who need to build something, but and need technical expertise. But how do you
You're
do
like the
that?
rarest, most valuable man in the valley.
Exactly. Run, 'cause you'll be chased out of here.
Go join some great startup early on, whose mission you can get behind, and they'll give you a lot of equity and a lot of responsibility, and you'll learn how to do a startup, and maybe you'll come along with your own thing eventually and want to leave and go do that. But in the meantime, you'll build a great alumni network. You'll learn on their dime, and you won't have, being an entrepreneur exposes you to the ultimate level of stress, because you're the last line of defense. And so you don't want to be in that mental stress situation unless you have to. So you're in a position where you can go join a startup that's small, but working on something important with good people and still get a lot of equity. And people like you are gold right now. So.
And where do you find those?
AngelList Talent, angel.co/talent. 1,000 startups recruiting like their first engineer, their first non-founding engineer, or even founders.
At the founder level, not engineer.
That's fine. They're recruiting founders too.
And you can also talk to VCs. I mean, basically, VCs would love, to this point, VCs would love to find you if they think there's a match with one of their portfolio companies. They'll connect you up.
Okay.
Great.
You guys talk about how you hear countless ideas and you turn them away or whatever, they don't appeal to you. As an entrepreneur, if you catch the eye of an investor but you don't get a good vibe from them, maybe you feel that they're going to hinder on your project or whatever it is that you're working on, have you ever had a situation where you're denied, like somebody doesn't want to work with you, and as an investor, as an entrepreneur, would you ever encourage somebody to decline money from a VC if you felt that they just weren't on the same wavelength as you?
I think you answered your own question, but yeah.
Yes.
Okay.
Yes. I've advised entrepreneurs to turn down money from investors that were not going to be helpful. They were sharks, so don't do it.
So if you have a group of guys that are just kind of putting something together, what does that look like? The kind of going from just a group of guys to, okay, now you have seed money and you're ready to go. I mean, as far as equity goes and all that kind of stuff. Do you work that out before you talk to the guy, the money, and then just kind of figure that out beforehand?
Yes, you should figure that out beforehand. There's a lot of good writings on it online. Generally, even splits work better, but not always.
Okay. And then as far as just, getting other people that aren't part of that core team to do work, paying them out of funds internally and stuff like that, does that, it always comes up, the split, the split of the company always seems like something that people stumble over, so.
Yeah. I've always believed that if it's your idea and you're the one bringing the idea to the table, no one else helped contribute to that idea, you should have obviously the bulk of the company, and then figure out who you're going to hire and then give them percentages based on the fact that you're hiring that individual and they're not really a co-founder with you. If you're partnering up with someone that is collaborating with you and actually contributing to the idea, that's a different case.
Okay. So I don't.
We need to move quickly.
Okay.
Speed round.
All right.
Over here.
Coming from a computer science background, do you have any quick suggestions for figuring out the business side of things without having like a trial by fire or getting an MBA at a really early stage?
Get a business co-founder.
Okay.
Yeah, I wouldn't even look for business. I'd look for someone who can sell.
Yeah, that's good.
Perfect intro. How do I find a co-founder if I'm not a people person?
Build and they will find you.
That's good. Go to a meetup and have a drink.
or two.
I have a question about, there's a bunch of companies popping up to do development services for equity. I have a company that focuses on building MVPs for startup for a mixture of cash and equity, and I'm curious to hear, how does an investor view a company, let's say in the seed stage or beyond, whose product was built by an outsourced team, basically?
Good question.
Yeah, I mean, I discounted a little bit. I mean, it depends. If it was just to get somebody running, but they know who they're going to hire, who's going to be able to build the product. But if I don't see the technical expertise to take that or do it in-house or understand it, then it's a big discount to me.
For me, it's a fatal signal. I wouldn't invest in a company that outsources core tech development.
Hey, so if you're trying to raise money for a consumer play, but there's also a B2B aspect of it that could make money, do you look down on something that has a revenue stream that's not part of the core long-term vision? Like, do you start looking at the valuation in terms of the revenue, or is it, you'll see the larger consumer play part of it? Like, would you rather see not, generate any revenue and just focus on consumer, or, is it okay to have that little revenue?
You can do either one, just do one thing.
I agree with that. Okay.
Okay, we're at the end of our show. We have to stop, unfortunately. So please join me in thanking our panel for answering your questions.
Thanks for coming.